Hi, and welcome to Best in Tesla News, episode 246. Yes, I am still on the road here in Sri Lanka, driving our tuk-tuk around here in the tuk-tuk rally for my Best in Tech channel, so stay tuned for that. But of course, you're gonna get your Best in Tesla news, because there's been so much great news this week. Not just with Tesla's earnings call that blew out every expectations, but they have also hit a lot of major milestones, both in production, the Cybertruck, charging network, megapacks, and so much more. At the same time, some of the German automakers are just struggling to keep their profits. All of this and much more in today's episode. Let's dive right in.
Let's put our living stereo stylus in this groove.
So this week we also got a new study that showed us what is one of the biggest hurdles for a quicker EV adoption here in Europe. The new European Commission has committed to phase out fossil fuel subsidies and ensure a just green transition. Now it has to deliver on these promises, says Transport and Environment. European countries spend $45 billion subsidizing fossil fuel company cars. There is a reason why more than 60% of Volkswagen sales are company cars and not private cars. As SUV company car drivers receive very high fossil fuel subsidies via company car taxations, the study also finds. Compared to private buyer, they pay up to €8,900 per year less in taxes for driving a polluting SUV. This also explains why companies are registering twice as many climate-harmful SUVs than private households. Of the total €42 billion, the €15 billion goes into subsidizing ICE SUVs. This is completely illogical and completely unacceptable that we still are pouring billions of taxpayers' money into a technology that's completely contradictory to the European Commission's green transition agenda, says Transport and Environment's Director of Fleets. A lot of employees have a company car which they can use for private trips, and the company cover all business and private users' fuel cost. This prevents many employees from opting for a much more efficient EV. The employer can often pick which car they get. The company car perks is much more prevalent in Europe than in the US. A lot of entry-level or low-level jobs, which often don't even require a vehicle, comes with a company vehicle. For example, this drives the absurd situation in Germany that for decades 2/3 or 67% of new vehicle purchase comes from commercial buyers. So you can see just how much higher EV uptakes in the private market, where consumers pick with their own wallets and not with their employer. Yes, exactly. So let's see if the EU Commission will act accordingly to Transport and Environment study and make sure to change that subsidy for polluting ICE cars, including company cars, and make sure that the commercial buyers will also pick a greener car. And Tesla held their earnings call, and it was one of the strongest earnings call I can remember. And the stock did also jump up 25% after the earnings call, which is usually not the case. I did make a whole video about it, so if you want to take a deeper dive, check that one out. But here are some of the highlights. Tesla had record deliveries and revenue. Tesla achieved record third quarter volumes, with vehicles delivering growing both sequentially and year on year. Revenue hit just over $25 billion, an 8% increase year over year. Tesla's operating cash flow was a record $6.3 billion, with free cash flow at $2.7 billion, highlighting Tesla's financial health despite heavy investment in expansions. They now have a record high cash on hand with $33.6 billion in the bank. And their operating margin jumped from 6.3% to 10.8%. That is such an important matrix that Tesla also told us that this is the number they will be focusing on, not so much about vehicle margins, as Tesla is becoming so much more than just a vehicle manufacturer. But the Tesla Cybertruck did become profitable for the first time within only 3 quarters of ramping up production, contrasting with competitors still facing losses like Rivian that has been delivering their EV pickup truck for 3 years and is still losing billions of dollars. And Tesla confirmed the plans for launching more affordable models in the first half of 2025, so that is going to give a nice boost to their lineup and should get Tesla back to growing in 2025. But Tesla does expect to beat last year's sales numbers, so that means that they expect to be able to sell more than 515,000 units in Q4. Elon even said that there was a chance that Tesla could hit 2 million in 2024, but I still just don't see how that would be even possible, as that seems to be way over their max capacity at their factories combined for 1 quarter. But of course Tesla knows better than me, so I might be wrong, but I would be very happy to be wrong on this one. But I still think we should be very happy if they just beat last year's numbers, as 2 million seems a bit far-fetched to me. But no matter what, it seems that Tesla is heading for one hell of a Q4. And Tesla plans for the Cybercab volume production by 2026, so not starting production, but volume production in 2026, with ambitions for 2+ million units a year, but maybe up to 4 million units annually, just as we predicted when we talked about the Mexico factory. And Tesla also expects full self-driving technology to surpass human driver safety by mid-2025. So that was very exciting to hear. And Tesla's energy business saw a record gross margin of over 30%, with Lathrop Megapack factory producing at max capacity, aiming for significant revenue from the Megapacks in 2025, when the Shanghai factory is also expected to come online in Q1 2025. This earnings call underscored Tesla's continued execution in face of skepticism, demonstrating strong financial result, advancement in production, and forward-looking projections in both autonomy and energy sector. But we also got some more big news about Tesla this week. Project Juniper might have started trial production. Tesla is reportedly set to kick off trial production of the refreshed Model Y at Giga Shanghai this week. According to a report from China, the automaker will begin production of Project Juniper as soon as October the 22nd. Tesla has been working on the refreshed Model Y, the world's best-selling car that is approaching a 5-year-old already, for well over a year. The refreshed, codenamed Project Juniper, is expected to bring many of the same updates that Tesla introduced to the refreshed Model 3, which was first launched in Giga Shanghai last year as well. In the lead up to this release, Tesla has been tested camouflage prototype on public roads in California and more recently in Spain. While these test vehicles have been covered in an attempt to hide what exterior updates might be coming with the refresh, there has been some leaked photo that I showed before of the rear of the Model Y that could be in for a significant design change. Tesla has said on more than one occasion that they have no plans to release the new Model Y this year, and it looks like that is accurate. But it might not be far behind the schedule. According to the report circulating in China's social media, Tesla is set to begin trial production of the Model Y at the Giga Shanghai on Tuesday this week. Those reports suggest that Tesla will start with a moderate production rate of only 15 units per day. This trial production will be closely monitored, employees will be kept away from others, and no phones or other devices will be allowed to prevent leaks, similar to the action Tesla took with the new refreshed Model 3 when it entered trial production, also at the Giga Shanghai factory. If these reports are accurate, it could mean a potential release of the new refreshed Model Y, at least from the Giga Shanghai factory, and in international market supply from China in the first quarter of 2025. So when might we expect the new Model Y in North America? Looking back at the new refreshed Model 3, it launched in North America about 3 months after the debut in China. But it's difficult to estimate when Tesla's American factories might begin production of the Model Y using that as a baseline. The reason it's difficult is because in North America, the Model 3 is only built at the Fremont factory in California. Tesla produces the Model Y at Fremont as well as Giga, Texas, giving them 2 factories to update. However, it is also giving Tesla more flexibility to update production lines at their new factory in Austin, something that is likely easier to do than in Fremont. And Wall Street still don't seem to get the bigger picture about Tesla, as they don't know where the growth will be coming from.
You know, I don't see how they grow volumes meaningfully from here when the Cybertruck is really like a kind of a specialty vehicle and they don't really have anything new coming and they don't really want to address the $30,000, $25,000 car market, which I think would have been a huge home run for Tesla with this RoboCab actually having a steering wheel. So, you know, it was a huge disappointment that you couldn't buy this RoboCab and actually just drive it, you know. Tell me how they're going to sell more cars than they're selling today.
Analysts like Ross Gerber here still are not really paying much attention to what Tesla is doing or saying at the earnings call, as he was disappointed with the We Robot event because he didn't get his $25,000 car he was waiting for. And he could not see how Tesla would get more sales. Well, Ross, let me try to explain that. Because Tesla has already told us for almost a year now, so you were probably just not paying as much attention to Tesla as we do. Because Tesla will come with more than one more affordable model in the first half of 2025. So that should get Tesla to a much bigger addressable market than today. If we take the rule of thumb that for every $5,000 you reduce the price of your car, you double your addressable market. And the most affordable version Tesla has today in the US is the Model 3 that starts at $42,500 before incentive. And we know Tesla's cost of producing cars is about $35,000. So with a more stripped down version with no ventilated seat, no screen in the back, no automatic trunk and so on, and with the new production method implemented into their already existing production line, I think they could pretty easy scrape about $5,000 to $10,000 off the cost of producing these cars. So they should be able to at least double their addressable market, maybe even quadruple or even more, because we can see here on ARK Invest charts over the addressable market. Tesla with a car around $40,000 only get access to about 5% of the market. But just getting the price down to $30,000, so not even the $25,000 car, but just $30,000 will give Tesla access to about 20% of the addressable market. And then on top of that, Tesla's EV, of course, also get the $7,500 tax credit on top. So getting the price down to $22,000, $23,000 and getting access to over 40% of the market in that case. Actually closer to 50%. So if Ross doesn't know where Tesla will find the growth from over the next year, he's really not paying much attention right now to what Tesla has announced and are coming with, and how this will increase their addressable market by many multiples. So what Tesla is trying to do over the next couple of years, before they get ready for the Cybercab and their 100% unboxed production method, is to get to their max production capacity of 3 million units. So that means going from 1.8 to 3 million vehicles over the next 2 to 3 years. So growing about 70% in unit size. I think that is a pretty good growth, and that is all without the $25,000 car that Ross is waiting for. And Tesla does expect to grow between 20 to 30% next year, so should be able to get to about 2.2 million units already next year. But that is only their car business. Like I mentioned, their energy business by itself will probably be worth $1 trillion in a decade or two. So yes, right now, about 80% of their $25 billion in revenue comes from the automotive sales, but more and more will start coming from their energy business, software business, and all other sectors as well. Seems like Ross does not really understand what kind of company Tesla is, and is only looking at them as a car business because right now that is where most of their revenue and profits are coming from. But with more than 30% gross margin on their energy storage that is growing exponentially, that will become a much bigger player in their profits going forward, that Ross is just completely ignoring. Like Brian White from Future Asa wrote on X about Tesla's new Megapack projects. $250 million here, $250 million there. Pretty soon, you're talking about real money. Yes, money that Wall Street just seems to ignore. And let's squeeze in the last short news topics into this news show. Yes, it's time for the Tesla Shorts. Tesla's supercharging network has turned 12 years old, and Tesla posted a little how it started and how it's going. That is just amazing what Tesla has done here, and something that no one else has been able to do on such a global scale. And Tesla also showed off in their earnings report that Tesla has reached another big milestone, their 7 millionth Tesla produced. Very impressive for a company that so many analysts thought would go bankrupt. And Joe Tagmeyer shared this video and wrote, "For those following the installation of Tesla's Giga Texas Cortex supercomputer data center and the massive cooling system that will ensure Cortex system stays cool, this is an exciting day as some of the fans' units are operational. This could be a test or it could indicate a potential operation of the computer system. Either way, this is great to see." Joe also shared these pictures of the Cybertruck production, which show that Tesla really have the Cybertruck production going at high volume, and that is probably why they have stopped their Foundation series and now are opening up orders for the normal Cybertrucks. And we got some cool examples from full self-driving doing stuff I have never seen before, as Pete also wrote on X. Well, this was a first. Full self-driving sees an emergency vehicle approaching and pulls over to the side of the road, then resume after it's clear. This thing is getting more and more intelligent every day. And Electric Nick gave some good news about BMW's EV sales. In Q3, BMW Group hit a record BEV share of 19.1% with 103,000 BEVs sold, their third highest ever. Among legacy automakers, BMW is standing strong in the EV transition. For perspective, Volvo's global BEV share in Q3 reached 24.8%. On a trailing 12-month basis, both BMW's BEV sales and their market share are trending upwards in a steady, almost linear fashion. Meanwhile, BMW's non-BEV sales in Q3 have hit their lowest point since 2021. It's clear the shift to electric is accelerating. So nice to see. Let's hope they will soon start earning money on selling these EVs, or their profits are going to take a big hit over the next couple of years as their profitable business continues to shrink. And Frida posted this very nice analysis of Tesla's full self-driving and robotaxi service, where Elon also shared it and wrote, "True, but I can highly recommend reading the whole post." But the post started off with this: "The rate of improvement in Tesla's full self-driving disengagement ratio is stunning. It's proof that scaling laws apply to self-driving and real-world AI, piecing together the process." And then she shared this chart from all the information available. And one thing to keep in mind here, when you look at this chart, is that this is only the progress in 1 year, this year. So compared to January 2024, where we had version 12.1, 12.5 showed 100x improvement, 100 times improvement in just about 9 months. That's just insane. And with version 13, we will get about 1,000 times improvement from January. That should come out this month, or if it's a little late, in November. But 1,000 times improvement in just a year. No wonder that Tesla think they will get better than a human driver by mid-2025. And just 2 weeks after SpaceX's amazing Starship 5 test flight, where they caught the booster back at the tower, SpaceX has already made a static fire test for Booster 13 that is getting ready for test flight number 6. So let's hope that FAA can have the paperwork ready in time for when SpaceX have a completely new rocket ready to launch. But I kinda doubt it. And Boeing is also looking to sell its space business, including the Starliner capsule and associated NASA contract to support the International Space Stations. Seems like their failure with the last launch to the International Space Station has made them realize they cannot compete with SpaceX that has also sent up a new capsule with only 2 astronauts so they can save Boeing's 2 stranded astronauts. Yes, when you are this far behind and don't see a way to catch up, you better just quit, and that seems to be the case for Boeing. Probably SpaceX that will get that NASA contract. And we got to see the Cyberbeast destroying a Lamborghini. 2 head-turners of cars here, but the one that won the race probably cost 3 to 5 times less than the other. And we also got Volkswagen Group's Q3 BEV sales updated by brand. And Volkswagen seems to be struggling with their BEV sales. In Q3, Volkswagen delivered 190,000 BEVs globally, a 9.8% drop from Q3 last year. Year-to-date, sales are down 4.7%. If they don't find a way to get their BEVs to grow again, Volkswagen could be overtaken by BMW if they continue to grow the way we have seen right now. But time will tell. But one of the Germans that is bleeding badly in Q3 was Mercedes, as Alex wrote. Mercedes-Benz with Q3 profits slumped of 54%. Ouch! Net profit fell by almost 54% to 1.72 billion euros compared to the same quarter of the previous year. The number of vehicles delivered fell by 3%. In China, the most important market for Mercedes, the decline amounted to 13%. In addition, sales of luxury vehicles, which are the most profitable for Mercedes, fell by 12%. In the BEV segment, sales fell by 31%. The return on sales in the passenger car business fell from 12.4 to 4.7%. Turnover fell by 6.7% to 34.5 billion euros. And Alexandra made this little comparison, and we can see that even though Mercedes had $13 billion more in revenue, Tesla had more in net income, more free cash flow, and more than double the amount of cash on hand, and a fraction of the debt that Mercedes does. Mercedes seems to be in big trouble if they can't turn this around, and maybe Geely is knocking on the door asking if they should buy the last of the Mercedes brand, as Geely already owns 9.69% of Mercedes, so they would probably like to buy the last 90% as they did with Volvo. But let's see if Mercedes can turn this one around. And Tesla wrote on X, a big tent came a long way. June the 8th, 2018, first Model 3 coming off the GA4 at the Fremont factory. October 25th, 2024, 1 millionth Model Y built at GA4. And they bought that factory from Toyota for just $42 million. Just amazing. And Herbert shared this chart from Tesla's safety report and wrote, Tesla has released a Q3 2024 vehicle safety report. Tesla's Model S, Model 3, Model X, and Model Y have achieved among the lowest overall probability of injury of any vehicle ever tested by the US government's new car assessment program. In the third quarter, Tesla recorded 1 crash for every 7 million miles driven in which drivers were using autopilot technology. For drivers who were not using autopilot technology, Tesla recorded 1 crash for every 1.3 million miles driven. By comparison, the most recent data available from NHTSA and the FHWA from 2022 shows that in the United States there was an automobile crash approximately every 670,000 miles. Yes, Tesla's full self-driving software is saving lives. And Jan from the EV Universe wrote, Giga Shanghai produced its first Model 3 in December 2019. Today, it has built over 3 million Teslas. Not bad for basically an open mud field with some digging going on.
So far, the China plant is basically an open field with some digging going on. It's harder and harder to believe that there will be Model 3s coming out of the Tesla China Gigafactory by the end of the year. But what Tesla doesn't have right now is a factory. So that's a problem.
Yes, Lopez's little speech there did not age well. It is today the most efficient car factory on the planet. And we see the trend pretty clear here in Europe for the ICE cars, even though everyone likes to say that BEVs are the ones that are falling in sales. But here are a chart from AJ, and as you can see, the trend is as clear as day. As he wrote, in Europe, internal combustion engine vehicle market share dropped for the first time ever below 40% in September. Yeah, not much left, and BMW still think there will be an ICE market in 2035. Don't know who really buys that, BMW, as your economy of scale is dropping fast and will make ICE car much more expensive in every single way. And the sales of ICE cars have dropped 17% in just 2 years. Yep, ICE cars are dead. And Electric Nick also wrote, exciting news. ACEA today released the latest passenger car sales data by fuel type and country for September 2024, wrapping up Q3. BEVs reached a 19.1% market share this month, the highest so far this year. That means that nearly 1 out of 5 cars sold in Europe in September was fully electric. With 213,000 new BEVs joining the roads, the electric revolution is picking up speed. Yes, indeed. And before we end off with a bit of fun, I just want to make a quick shout out to my newest supporters of this channel. My new YouTube member, Rob Law, David Frankel, and Arthur F. And my new Patreon producer, Daniel Hall. Thank you so much for your support. I am doing this all by myself, but you guys are all the producers of this new show. Thank you. And let's end off with a bit of fun. A little showcase of us men helping out our spouses cleaning the house. That is all we have time for in this new show. Hope you enjoyed it. If you did, don't forget to hit that like button. It really does help out this video a lot so others can find it on YouTube. And if you did like it, maybe you want to consider hitting that subscribe button, notification bell, so you don't miss out on future videos just like this one. And if you're already a subscriber to the channel, thank you so much for the support. But if you want to support the channel even more, remember you can, for as little as $1, become a patron of this channel, or become a member of the YouTube channel to get a shout out as some extra perks like early access, ad-free versions of my videos, exclusive videos. So hit the members button or check out Patreon to find out more. And don't forget to follow me on X. I post pretty much all the news as it comes out and a lot more. And check out the merch store to get some merchandise and support the show. It is also possible to support the show without becoming a member or a patron. There is a donation option down below or on my website bestintesla.com. You can also become an executive producer and get news articles, exclusive videos, behind the scenes, and access to all my research charts and spreadsheet also on bestintesla.com, or as simple as hitting the super like button. And thank you for watching. And until next time, take care out there and be nice.